Good afternoon, everyone. Welcome to Banao Bharat's Trading for Living Thursday expiry live session. Almost we are on the verge of closing today. Just about 8 minutes left. But a very difficult expiry we have seen today. Big news from SBI. Let us quickly go into the charts. First, I would begin with Bank Nifty today. You can see here Bank Nifty opens at around 44,038 in the morning with the opening low of 43,750 levels. Or what was the opening low? The first candle low was 43,792 and the first candle high was 44,038. After that, spent some time within this first candle range and tries one breakout attempt and just travels about 20 points from the highs of 44,038 goes up to 44,057. You can see the candle here. This is the candle at around 12 o'clock. So this 12 o'clock green candle breaks out of the level which is supposed to be a good breakout, but from there on you can see here how the whole thing starts crumbling apart and transforms into a fake breakout and puts all the trend followers into big trouble today. Especially there was SBI's results, and this is the SBI's results candle at around 1:45 to 2 o'clock. Between this range you can see here how this single candle with so much of volume, it makes a new low, again picks back, but it doesn't sustain and continues to go down. So this is how a fake breakout troubles trend followers sometimes, but these are all part of the game. We need to always know what can go wrong. I have maintained in last so many videos also, we don't know what the market will give us, but we know how much we can give to the market at all times. If we know when it is wrong, how much we are ready to give to the market, that will keep us alive in the market for the coming days, and definitely eventually trend followers will definitely make money, because these kind of whipsaws are there in the markets, not only in Indian markets, across the board. Wherever you see, wherever there is a trend, there is also whipsaws along with the trend. So no trend just goes smoothly in one direction. When there is a trend, it means sometimes there is a fake signals that gets generated, and there is a tendency for the trap to be laid by the smart investors or the smart traders, and people like us sometimes also have to end up biting the dust and saving ourselves with good stop losses and coming back tomorrow once again with proper setups. So for a trend follower, generally we trade only the breakouts. Breakout is our bread and butter strategy. Trend follower, generally he has three kinds of setups, at least most of the trend followers play breakouts and reversals, but in my methodology I have devised three types of trading entries, which is at the breakout level, at the pullback level, and at also the reversal levels. So I have three entry points: breakout, trend breakout, which is either the trend continuation or the trend reversal breakouts, and the pullbacks. So when we trade all of these things, we generally, trend followers, trade the breakouts with full capital. But when it comes to pullback, we are not sure whether this pullback will take a support and go up or not. So we trade not 100%, we trade slightly less than 100% of the capital when we are playing the pullback game, or even the reversal game. Even we play around 50% in case of trend reversals strategies, because after a good uptrend or after a good downtrend, when there is a reversal points, that could be a fake breakout as well. So we always keep it in terms of slightly lesser capital, so that we don't risk everything. That is our way of risk management. when you will go full-fledged, when you will go with 75% of your capital, or when you will go with your 50% of your capital, will determine how long you can survive in the game. In spite of having about 60 to 70% of success ratio, or even if you have a lesser success ratio in trend following, it is important you manage your capital and position sizing accordingly, so that you can survive for couple of more days or months or years. Here Bank Nifty was in downtrend, and there was a opening candle which looked like it would, if it once again takes out, it would be a good breakout on the upside. So it was a reversal breakout, and we had to play the long, and we played as per our system, but it just cuts the morning high of 44,038, goes up to 44,057, and from there on you can see the bleed. And also one more important observation today is with respect to SBI. People always here the question for any trader, should we to give importance to the data or events? So SBI, you can see here, SBI today at around 1:45 to 2 o'clock, it came out with one of the best results ever for a PSU bank. For this quarter alone, ending in March, Jan, Feb and March, in 3 months, they have made a profits of about 16,700 crores. In 3 months, in 90 days, an organization or an institution makes that kind of money, and you can see the price action here from the highs of 593 all the way collapses down to the lows of 572. And so this is the kind of situations where we as traders have to deliberate what is the stance that we need to take. If we start avoiding the events, then there are times every day there is something or the other event happening. Some days there are company results, some days there are companies corporate announcements, sometimes there are industry related information coming out in the markets, and sometimes there are policy changes or policy informations, either it could be from RBI or any economic affairs ministry, or from finance minister, or there could be geopolitical information that is coming into the market or events playing out. So if we start avoiding events, then we will most of the time will have to be on the back foot, because there is some of the other events happening at all times. So how do we judge which event we need to ignore and which event we need to play? The best thing is, don't look into the event whether this event to be played or not to be played. Instead, look into your price action, and if that stock or that index gives you a entry, do go ahead and play the game as if it is one another normal day, so that you will not miss out on the trade. Yes, there could be very high volatility in that particular counter, and there is very high chances of getting stopped out even before you reach the target, or it could be entirely a false trade, or it could be entirely a very right trade. Whatever is the thing, instead of judging, looking at the event and judging whether this event can be played or not played, you take a call whether this setup can be played or not played, because this setup is with you at all times. Events are changing, but the setups that you are playing is fixed. So if you think even if there is a call, and if you don't want to play that setup, that is still okay, but do not start segregating the events and say I will play these events and I will not play these events. My point is, you can on any given day, when your setup is showing something, whether it is a buy signal or a sell signal, it is your complete discretion and judgment to play that setup or not. But do not decide based on, because of these events I will not play my setup today. When you are doing a back testing, the system doesn't know any of these events. System just plays the price movements, and based on that it will give you the overall end result of your strategy. So in when you put a particular strategy for backtest for say 1 year or 2 year, there will be so many expiries, there will be so many events, there will be so many information that is relevant for that particular script. But when a backtesting mechanism is ignoring all of those news and events, then it is better on any given day we also ignore all of those news and events and play our setups. How much to play? Maybe 100% or maybe 50% or maybe 25%. That is again in your control. So you can, based on if there are some major events coming out, then you can always reduce your total risk capital, what you are ready to put onto the table, and then you can decide how much you want to put onto the table and see whether it goes right or wrong. But the moment we start segregating the events, we don't know whether RBI policy is a big event or not, we don't know whether Fed policy is a big event or not, we don't know, we don't have so much of knowledge or experience or skills to decipher and calculate how all of these major events play out. So many things even small decisions, we end up making big mistakes. So we are not political analysts, we are not economists, we are not very deeply involved in the macroeconomic or microeconomic analysis. It is not possible actually. How much will you become an expert in a steel sector or a cement sector or a banking sector? You can't become an expert in all of the sectors. Even if you are a specialized banking expert, still you will not be able to translate the events into the price. You can see here, even in spite of such a fantastic results from SBI, you can see the price action, it just collapses. What does it say? Does it mean markets already knew, which means do we say market is rigged, or do we just is it market already knew SBI is coming out with good results and now the profit taking is happening? Everything is a speculation. We are speculating, maybe all the insiders, they knew that there is going to be good results, so they are exiting. But we really don't know. All of these are only speculative thoughts, and we cannot trade based on speculative thoughts. We have to trade based on our data points. So these kind of events will be there. This kind of getting caught on the wrong foot is always there. How you can save yourself from all of these kind of pitfalls is only by effective risk management. When I say risk management, have your stop losses defined. Again and again I keep telling to the market participants, the reward is not in our hands. Whatever market gives, we have to take it, but the risk is definitely in our hands. We can control our risks. That is why when you devise a system, do not do risk to reward systems, you do only the risk system. There are many people whom I see, they say I have 1:2 reward ratio, I have 1:4 reward ratio. I do not formulate my systems based on the reward. I formulate my system based on the probability of the strategy giving me a winning trade, and based on that probability I define my risk. So two factors I know for sure. What is the probability of my setup? Okay, I have a setup which is giving me 70% probability. So I know out of 10 trades when I take, or when I take 100 trade, I am sure of 70 trades being positive. How far positive we don't know, but I know 70 trades are above my entry. How far above my entry I don't know, but I know it is for sure it is above my entry 70% of the times, and 30% of the times it is below my entry. The problem is, what I have to fix it is how much I am ready to lose. Whenever my setup gives a signal, entry signal, I enter, and I know this could be one of those trades which is in that 30% probability at all times. I know that my system, this could be one of those trade where it might go down also. In that case, I know what is my stop loss. Without questioning, without feeling bad, I just exit at my stop loss, so that it becomes easier for me to swallow the bitter pill and move ahead with the next trade. So that is what I wanted to just make a comment today. One on, like, how fake breakouts, because trend followers, it is important for us, the breakout strategy should work well. When a breakout strategy works well, that is when, like, trend follower will make good money. But today one of such days where, like, breakout fails, that's okay, there is always tomorrow. And another important observation which I wanted to bring it to people's attention is, like, these kind of events will always be there. The event will not translate into the price immediately. Maybe after few days SBI might go to new highs, might cross 600, might cross 700, might go to 1000 also, we don't know. But on a day when there is a big event, the price action and the event information has no correlation. So keep this thing in mind. When you are playing on particular any event, there is always a possibility, like, there is no correlation between the news and the price action. So stop watching the news, instead start watching the price. The more you ignore the news, the more you ignore the events, the more you ignore the external factors, and just pay your attention only on the price action, that will save you from lot of pitfalls. So SBI, classic example, one of the best results by a PSU bank, highest profit 16,700 crores in just 3 months time, which is 90 days. In 90 days, organization gives you 17,000 or 16,700 crores of profits, and the stock market is not ready to honor that. You can see here, from the highs of 593 goes all the way down to 570 levels. So the markets have ended, and there is nothing much more for us to discuss today. Hope you people had a good expiry. Hope you people were safe in trades today. We didn't have a positive day, but that's okay. Let us once again meet tomorrow with a fresh perspective on the market. Until then, Om Swasti.